Hello, everyone.
Hello, everyone. Good afternoon.
Good afternoon, guys. Welcome to part two of our Technical Analysis 101 series with me and Franco.
Yeah, we're happy that you are joining us today.
Yes, so we're done with part one. Part two naman, right?
Yeah, in case you missed part one, you can watch it on our Facebook page and wait for the replay on YouTube.
Yep. So let's look at our agenda for today. In the past webinar, we talked about the introduction to technical analysis. So we looked at what TA is, the candlesticks, trends, when you should be buying, when you should be selling, and some of the common chart patterns, right? So now we will be talking about how to execute your trades, right? So this comprises of crafting your watch list, right? Then after that, creating your trade plan. Where do you buy? Where do you set your stop loss? Where do you set your take profit? Then some sample trades. Then how do you position size, right? Because you can't go all in, right? Then we'll look at some advanced order types that you can use in Dragonfly.
Actually, not some, all. We're going to go through all the different conditional orders you can make here in Dragonfly.
Yep. So let's start.
All right, start it off, Jared.
Okay, but stay tuned, guys, because you'll have a chance to win an exclusive Dragonfly tote bag and cap. So stay tuned. So let's start. Let's start with how do you craft your watch list and trade plan? So first, what's a watch list, right? So a watch list is basically your hit list, right? The stocks to focus on, because diba sa PSE we have around 280, 270 stocks, right? So ang dami niyan, guys. So can you trade all of them all at once? Parang hindi, diba? So what you have to do is among all those 270 stocks in the PSE, you have to narrow it down, diba? Kasi if you're focusing on everything, parang wala eh. Parang you're all over the place,
Recording
right?
in
Wala kang
progress.
focus, you don't know what to trade anymore. So within the 270 stocks, you have to narrow it down to a list of mga 5, 10, 15, right? Yung talagang konti lang para you can focus on it, right? So next. So how do you craft your watch list, right? So of course, you have some prerequisites. So first, you need to know your fundamental analysis and your technical analysis, right? So the previous webinar, we already taught how to conduct technical analysis, right? So how do you find your entry, stop loss, target, right? So we'll get into further detail, right? Then fundamentals, right? We didn't discuss it, but I'll give you parang a short checklist on how you can do this, right? Right? Because you don't have to do yung mga number crunching, right? You don't have to be good with numbers. You just have to know how to read the news, diba? That's the shortcut. So tignan natin, guys. How do we do it? So first, fundamental analysis, diba? I'll make this very fast, right? So what I do is, I just ask myself mga 4 questions, right? Parang checklist lang siya eh. So first, I would ask myself, what are the macroeconomic factors, right? What's the macroeconomic environment? And is it good for the company, right? So here's an example is, yung reserve requirement ratio, it recently went down by 200 basis points, right? So that's around 2%. So it used to be 7%, right? 7. Then now it's at 5% na lang. So what does this mean? It means that banks are allowed to loan out more money to people, right? To people looking for credit, right? So how banks work kasi is you cannot loan out everything because you have to keep some cash in the bank for reserves, di ba? Para ma-service mo yung withdrawal ng mga depositors mo, right? So basically, from 7%, you have 100 pesos, you have to leave 7 pesos in the bank in case may mag-withdraw. Now, 5 pesos na lang, right? So the 2 pesos difference, they can loan it out na, right? So that's actually good for the banks, right? So something like that. Or example, interest rates, right? Is it good for this company? Is it bad? Diba? So something to consider. Next, is the company making more money? I think this is one of the most important questions because one of the main drivers naman ng stock prices is earnings, diba? Kung maganda earnings mo, what are the odds na tataas rin yung stock price, diba? pretty high, di ba, I'd say. So we have to look, tumataas ba yung earnings ng company, right? Is there earnings growth? Tapos yung margins nila, right? So basically, yan yung tubo, right? So if you're spending 50 pesos, di ba, to make, and you're selling it at 100, di ba? Your margin is 50%, di ba? Kasi 50 pesos is your profit. So you have to check rin kung lumalaki yung tubo ng company, right? So are the margins increasing? Are they becoming more efficient sa mga cost nila? Di ba? Cost efficient, di ba? So something like that. The next is, even if the company is not doing well right now, di ba? Parang last year, their earnings went down or pangit talaga, it doesn't mean na you should not look at the company anymore, right? So what you call those are turnarounds, right? Turnaround play. So you would look naman if, you have to look naman if, do you think there is a chance that, right, para, or babawi sila in the next quarter and the next years to come, right? So that's what you have to consider. If the company is not making money now, can it make money this year? Can it make money next year, di ba? If so, then yeah, you can look at it, right? Baka mag-recover, keep it in your watch list, right? Next, are there any significant company developments? So example, is the company acquiring other companies, right? Example, is it acquiring more brands, right? Because I think before they acquired CBTL, right? Coffee Bean, tapos Smash Burger, then recently Compose Coffee, right? So parang aggressive sila mag-expand, right? So there's a lot of growth in the company. So that could also drive the stock price and earnings, right? So those are the companies you want to look at. Other developments can be new products, right? Example, Angel's Pizza, right? Angel's Pizza, they come out with another good pizza flavor, right? So if patok yung flavor ng then baka their sales will go up and earnings tataas rin, right? So something like that. Or example, change in business model. A good example is DG Plus. Before, DG Plus was not DG Plus. It was called LR, Leisure and Resorts, right? So they weren't even in the online gaming business, diba? But I think what happened was they changed the ticker name from LR to Plus. Then they focus na lang talaga on online gaming. So that's a change in business model. And then after that, from 4 pesos, it's now near 30 plus, diba? So that's a change in business model, right? Then next is, you have to look at the positives, right? But you also have to look at the negatives. What are the risks in the short term? So example, kung you're betting on an acquisition, it might fall through, right? Baka di matuloy, right? Then another one is new product pero hindi patok sa market, right? Let's say Figaro, Angel's Pizza, they have a new flavor ng pizza pero pangit pala lasa, diba? It doesn't taste good. So the earnings will take a hit, diba? Kung the experiment tapos fail rin pala, diba? Then another concern can be utility companies, right? What if regulations masama, right? Example, diba? URC, what if suddenly there's a sugar tax, diba? Mga tax on sugary beverages, diba? Beverages and snack foods, diba? And URC has a lot of chichirya, mga sweetened beverage. So if ever may increase in tax, diba? That's not good for them, right? So that's a risk they have also. So this is a short checklist that you can consider, diba? So you want to make a watch list na talaga may growth driver yung company to go up, diba? Not just based on the charts, but based on the fundamentals, the news, diba? And you have an idea na in the next quarters to next few years, their earnings can really go up, diba? So there, next. So what I like to do is, dapat balance yun eh. So you should have the fundamental side and technical side. But sometimes, admittedly, diba? Sometimes you find a stock na maganda technicals, diba? Pero you have no idea about the fundamentals. Or minsan, you like the fundamentals, pero you have no idea about the technicals, right? So what I do is, you have to look at both. If you find a stock na maganda fundamentals, tignan mo rin yung technicals, right? right? Then if you like a stock based on their technicals, you look at the fundamentals rin, right? So for me, the higher quality trades, yung mga mas higher probability, are when the fundamentals and technicals align, di ba? They both give you a reason to take the trade, right? So this will improve talaga the trade quality, right? So essentially, you want to look for stocks with fundamental drivers. Tapos yung chart formation niya, very bullish. So there. Next. So with that criteria, you'll be able to form a list of companies to put in your watch list. So why is it important rin to look at the fundamentals, di ba? Can't you be like, technicals na lang lahat? Well, you need to know the fundamentals rin so that you can understand the business, right? Tapos you know what you're getting yourself into and you can set reasonable expectations. Because, for example, a company that's growing 1% lang each year, medyo flattish pa siya, do you expect the stock price to go up 100% in less than 1 year? Parang hindi, di ba? Kasi that's not the growth trajectory of the company, right? So parang you have to set talaga reasonable expectations. Next. So that's done with the fundamental side. Let's talk naman about how do you form your trade plan. So let's say my watch list ka na of around 5 to 10 stocks, di ba? Now, how do you enter the trade, right? So this is where we go back sa technicals, right? So first, the first components are the entry, stop loss, and take profit. So first, entry. There are two main entries, di ba? Buy on support and buy on breakout. That's it, di ba? If it's in between, di ba, wala, avoid. You should only be buying kapag nasa support or on the breakout. Those two lang. Let's keep it simple lang. Then stop loss. Where do you place your stop loss? So if you're buying sa support, bounce of support, you should place your stop loss below support. Diba? A little bit below. Kasi kapag tumagos sa support, that's a breakdown na. You know na the support is broken, invalidated na yung trade. So that's where your stop loss should be. Then next, kung you're gonna enter a buy and breakout setup, right? You should place your stop loss a little bit below resistance. Kasi if hindi tumuloy yung breakout, right, then it will go back into the range, right? So that's where you will get stopped out. The next is setting profits, right? Setting targets. Where should you set it? You should set it at the next major resistance, right? So, example, you buy the breakout at 10 pesos. Look, where's the next resistance? Baka mga 15, 10, 11, 12, something like that, right? Or if you want to use fundamentals, you can set it at the fair value price, right? So let's say BDO, the target price is around 160 there, di ba? So if you buy it at this price, kapag tumama sa 160, fairly valued na yung stock, right? So you can sell it rin at that price. Or whether in based on technical indicators or reversal patterns, right? So if you see na parang long wick candle, parang rejecting higher prices, di ba? Inverted hammer, then pwede mo na ibenta. So a rule of thumb is that you trade with a minimum risk to reward ratio of 1:2. So I'll discuss that more sa next slide. Yeah. So I want to ask the audience a question. So you guys can chat your answer sa comment section. So tataya ka ba if alam mong mas malaki ang kaya mong mawala kaysa sa panalunin? Yes or no? No. Oh, daming no ah. Ba't mo lang yes? Uy, depends. Oh, interesting. No. So generally, most people know, right? Kasi it's not worth it, right? So if you're gonna risk 10 pesos, di ba? If yung potential reward mo, 10 pesos lang rin, parang meh, di ba? Parang I wouldn't bother, right? Or, example, tataya ka ng 10 pesos, pero yung potential reward mo, mga 30 pesos, 20 pesos. Would you buy, right? If you risk 10 pesos, pero you can earn 20, 30. Tataya ka ba? Yes. Yes or no? More likely, yes. Yes, yes, okay. Others, yes. Kasi nga, your reward is higher than your risk, right? So that's what I'm saying. At least 1:2, di ba? Para it's, if it's 1:2, di ba? Parang pwede na, right? Because you can earn twice as much as you're willing to risk, right? So that's the rule of thumb. Dapat 1:2. So next. So example to. So this is Manila Water back in 2003, di ba? So that's around what? 2 years ago. Grabe tagal na. So here, you have a support level, di ba? Clear, di ba? That's where price has bounced multiple times. So that's a buy and support. Tapos, how do you enter this? So here, di ba? Nag-bounce na from support. So you can actually enter na at the close of that candle. So you set your entry 17.4. Tapos, where's your stop loss? Your stop loss should be below support, di ba? Yung price level na, if price hits that, parang breakdown na sa support. That's your stop loss. So here, for example, I put my stop loss 16.7. Okay. Then next, target. For me, I will look at the next resistance level. So for me, I see na 19.5, medyo nauntog yung presyo dun. So I set my target at 19.5, right? So first, I put my entry 17.4, stop loss 16.7, target 19.5. Next question is, what's my risk to reward ratio? So just by looking at the chart, pasok ba sa 1:2 yung risk to reward ratio? Chat kayo, guys. Yes or no? Pasok ba sa 1:2? Just based on looking at it, Yes or no? Chat kayo. Yes. 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 Okay. So the answer is yes. Why? Because kahit you guys eyeball it lang, di ba? The distance from the entry to the stop loss, parang yung distance na yun, parang when you stack it on top, di ba? When you stack it on top, parang more multiples of that entry minus stop loss, di ba? Yung distance na yun, right? When you stack it on top. So yes, the risk to reward here is, I think, 1:3, di ba? So, question, who thinks na tataas yung stock price? Here, this is the chart, So, will the price hit your target or stop loss? Who thinks stop loss? Chat nyo, stop loss. Kung target, target. Will it hit the stop loss or target price? Uy, bearish lahat stop loss Ayan, may isang target. Target or stop loss? Sige pa, chat po kayo. Anong guess nyo? Don't look at the chart daya yan. Target. Sige, target. Okay, reveal. Yun, it hit the target. Wow, galing. So you bought on support, di ba? Your stop loss below support. Tapos take profit sa resistance. Ayan. So this is a winning trade, di ba? So here, if tumama na sa target, then you can sell na, right? But if you think na malakas pa yung MWC, right? There's a lot of catalysts for it to go higher, then you can hold it pa or maybe sell half, di ba? So up to you na yan. So next. Here naman, let's look at buy break. So this is Ali back in 2003 also. So here, 30 pesos, mukhang resistance level, di ba? Kasi each time price hit 30 pesos, parang nauntog siya, di ba? So now that it's back at 30 pesos, parang could it break out kaya, right? You don't know, right? Pero let's say, yung expectation mo sa trade na to is mag-breakout in Ali sa 30 pesos. What will happen, right? So first, you set your entry at 30 pesos, di ba? Yan yung resistance level, di ba? So that's your breakout. Next, your stop loss dapat a little bit below resistance, right? Kasi if it goes back down, di ba? Parang nauntog na siya, right? So your stop loss should be a little bit below resistance, di ba? May konting buffer. Then where's your target? So you look at the next resistance. So here, it's around 33 pesos, right? So there, entry at 30, stop loss around 29, target 33. So pasok ba sa 1:3? Or 1:2? Risk to reward? Yes or no? Pasok? Yes. Chat, guys. Yes. Yes, okay. So, yes, di ba? Kasi you can just eyeball it, di ba? Yung distance from entry to stop loss, kapag pinatong mo, multiples of that. So, yes. Pasok sa risk to reward. Now, question is, do you think this stock will go up? Tutuloy ba yung breakout at mag-hit yung take profit mo at 33? Yes or no? Chat, take profit if yes. Then stop loss if you think babagsak siya. Chat, guys. Uy, stop loss. TP, stop loss. TP. Wow, very mixed, ah. Stop loss. Parang wala lang kayong believe kay Ali, di ba? Joke. Stop loss, target. Okay, mixed, ah. So, let's reveal. Wow, tumuloy yung breakout, di ba? So, galing. So, it hit the take profit. So, if price hits this level, di ba? What will you do, right? If your plan is to sell agad, right? Then you can sell, di ba? Kasi tumama na sa take profit mo, right? Or if you think na tutuloy pa yun Ali, right? Na you think the property market in the Philippines is still booming, right? Di ba? And Ali will be the main beneficiary, right? Then you can hold it, di ba? Or you can sell maybe 1/3, 1/2, di ba? So up to you. So there. Pero the question is, lagi bang panalo sa stock market? Lagi ba? The sad reality is not really, di ba? Kasi in the stock market, parang it's called calculated risk, di ba? There's always a risk in everything, right? So the stock you like doesn't always go up, di ba? That's the sad reality, di ba? So just because parang sumikap ka, di ba? You read the news, you made your watch list, tapos may trade plan ka pa, may entry stop loss target, it doesn't mean na the market owes you. So next. So let's see an example naman. So here, this is Espinet back in 2002. So here, buy on support. The question is, who thinks gagana yung trade plan na to, right? Who thinks na if you buy at support, it will hit your target at around 170. So chat kayo, target TP or stop loss for this? Stop loss, stop loss. Uy, ang daming stop loss. Parang di no na this chart eh. Dami ata nasunog dito, grabe. So let's reveal what happened. Yes, tumama sa stop loss, right? So the question is, what happens when the stock hits your stop loss? The right answer is, dapat binenta mo na siya at a loss, di ba? Sad to say, pero that's life, right? Not everything goes up, di ba? But what matters is your risk to reward is at least 1:2, right? So if you lose one, at least if you have winning trades, di ba? You gain 2, di ba? So okay lang, right? As long as your wins earn more than your losses, right? So here, dapat once tumama na sa stop loss mo, you have to practice risk management and sell at a loss, di ba? Para from 1% loss, it doesn't go down to 10% loss, di ba? So you have to minimize the risk. Next. So example naman, ito, buy and breakout. This is URC back in 2003. So here, breakout, so you have a resistance at around 122, 121.6. Ayan. So breakout. So who thinks tutuloy yung breakout? Yes or no? TP, type TP if you think it'll hit the target. Tapos stop loss if you think babagsak siya. So, yun. Uy, TP, TP. Stop loss. TP, TP. More TP, ah. Stop loss. Sige, reveal tayo. What happened here? Wala. Stop loss, di ba? So, grabe. So, again, once it hits your stop loss, what should you do? Type it in the chat. What should you do if tumama sa stop loss mo? Should you hold? Should you cut loss? Uy, may dito cry. So, cut loss, yeah. Pwede rin cry, pero for like few minutes lang. Wag naman magdamag. So, tama guys. Cut loss. Kasi you have to minimize your risk. So, correct. Next. Pero my question to you is, now that you have a trade plan, di ba, we have an entry, we have a stop loss, we have a take profit. Does that mean all in na ba? All in na ba? All in. The answer is no. Right? So, di pwede all in. And I will explain why. Next. So, how do you not get burned in the stock market? Risk management and position sizing, right? So, kasi the problem is, if you all in 100%, kapag bumagsak ng 10% yan, you're down 10%, right? Unlike if you only put 10% of your money, let's say you have 100K, you only put 10,000. Kapag nag-down yan ng 10%, you're only down 1,000. And 1,000 is just 1%, right? So, let's talk about position sizing. So, how we do it is, first, determine mo muna what's your pain tolerance, right? So, what's the max amount you're willing to lose in a single trade? So, for me, example, if I have 100,000 pesos, for me, I'm only willing to lose 1%. So, that's 1,000 pesos, right? So, for me, that's a rule of thumb, right? I'm only willing to lose 1% of my total portfolio per trade. So, this means, parang, think of it parang video game siya, di ba? May health bar, right? Di ba, a cat has 9 lives. Ganun to, right? So, each time you lose a trade, parang that's 1 health bar out, di ba? You still have 99 more, right? So, basically, it will take you 100 losing trades para ma-wipe out ka, right? So, if you lose 100 trades in a row, then malas mo na talaga. Pero sana di naman, right? But that's how it works. Parang health bar siya. So, next. So, how do you compute your position sizing? So, there's a bit of math, di ba? Pero this is the only math, trust me, right? So, first, you have your loss per trade. So, loss per trade is 1,000 pesos. You divide that by your entry minus your stop loss price. So, that will equal your number of shares. Pero important rin na you have to account for the trading fees here in the PSE. So, next. So, here's an example, di ba? So, I have an entry at 8 pesos. Yung stop loss ko at 7.16. Tapos, I'm only willing to risk 1,000 pesos per trade. So, what I will do is 1,000 divided by 8, which is my entry price, minus my stop loss at 7.16. So, that will equal 1,190. Pero, you have to account for yung board lot sa PSE, di ba? So, at 8 pesos, I think the minimum is 1,000 pesos. 100 shares, di ba? So, wala siyang 9 shares. So, from become 1,100. So, there. The total cost is 14,000, around 14,000 pesos. Okay. Right? So, just to refresher, okay, so if my entry is 8, stop loss 7.16, then I'm only willing to risk 1,000. What I will do is 1,000 in risk per trade ko divided by entry 8 pesos minus stop loss 7.16. That will equal 1,190. Pero since my board lot sa PSE, right, you have to round it down to the nearest board lot, right? So here it's going to be 1,100 shares. So there. Next. So basically, that's how you do it, right? So the routine is scan over your charts, di ba? Look over the 270 charts, di ba? Tignan mo yung charts, di ba? Tapos plot your lines, di ba? Then craft your trading plan. Tapos once may trading plan ka na, compute your position sizing, di ba? Then once meron ka na yan, execute. Then once you execute, you have to journal your trades, di ba? Parang what you learned from this trade, Kung talo ka, ba't ka talo? Kung panalo ka, what went well, di ba? Something like that. So next. So here is the flow. So first, watch list, di ba? You need to look at your fundamentals and technicals, di ba? Tapos once na narrow down mo na, you have your watch list. So once you have your watch list, plot mo na yung entry points mo. So you have your support and resistance. Tapos determine mo na saan yung entry mo, saan yung stop loss, saan yung target. Then once you have that, compute your position size, di ba? Ilang shares dapat bilhin mo. Once you have that, execute mo na yung trade, right? So that's the workflow around being a trader. So next. But wait. There's a catch. What's the catch?
You have to execute your trades using Dragonfly's platform.
Wow!
So with the Dragonfly's mobile app or web platform, you can execute different types of trades based on the order type. So we'll go through every single order type that you can make here in Dragonfly. So the first one is what we call a limit order. The most common order type that you can make here. So basically how it works is that a limit order is an order that allows you to buy or sell a stock at a specified price or better. So there are two types. You can set a buy limit order, which executes only at the limit price or lower. It's used when you want to buy a stock at a specific price without overpaying. And then the other one is what we call a sell limit order. It executes only at the limit price or higher, used when you want to sell a stock at a specific price without selling it too low. So example here, if you look at the image there, if the stock, for example, is trading at 39.5 and you place a buy limit order at 38.95, your order will only execute if the stock price drops to that certain level or lower. And similarly, if you want to take profit on your position, you can put a sell limit order at 42, meaning that it will only execute once the price rises to 42 or higher. So this stock I'm using is AREIT. Also, take note of the duration, as you can see on the far right side of the image. Basically, so this applies to all types of trades. It basically determines when your order will expire. So if you put day, by 3 p.m., your order will no longer be active, and then you will have to repeat it the next day. It basically expires within the day. And then GTC is good till cancel. It basically means your order will remain active or working until you cancel it yourself. And GTD, or good till day, is basically a custom duration type. Basically, you can set a specific date. For example, you want your order to expire by the end of the month, Feb 28, then you can do that. So here's an example of a buy limit order in the next slide. So this is Manila Water, same chart Jared was showing earlier. So as I'm sure you already know that it will hit support, but let's say you're busy, you're working a full-time job, and then you want to anticipate MWC at support. So you can set a buy limit order at 17.30, and then simply wait until your order is filled. You no longer have to pay attention, but please remind yourself to change the duration to GTC because it will not happen in a single day. So sometimes it can you will have to wait for a few days or a week before your order gets executed at your designated price. So on the next slide, you already know that it will indeed retest support. And then once that happens, you will get filled at 17.30 or lower or better, right? Because you're trying to buy the stock. So if you're willing to pay higher and higher than the bids, you will immediately get filled. So the next type is a sell limit order. So it's just the opposite of a buy limit order. So let's say you have a position in Manila Water, same company, and you want to take profit at 19.5, right? So you can simply set a sell limit order at 19.5 and just simply wait and go on about your day. And once the price reaches that level, as you can see on the next slide, you will be automatically filled and taken out of that stock. And you can happily enjoy your profit and reinvest it elsewhere. So if you want to sell immediately, you have to place your limit order lower, a lower than the current market price. So that way, the bidders will be able to fill your order immediately because they're willing to pay that certain price. Because if you sell too high, if you sell higher than the current market price, you will have to wait until there's someone on the bid side willing to pay for that stock at that price. All right, the next type is an advanced conditional order. So basically, it's what we call a stop limit order. It's a type of order that is designed to help you buy the breakouts or automatically cut your losses and take profit. So a stop price is basically the price at which your order will be triggered. Basically, stop price is your trigger price, meaning your order will be activated and sent to the market. Because if it's not hit, if for example you set your stop price at, for example, 37, but the current price is 39, your order will not be active. It will still be in working progress. So and then the next order you would have to input is what we call a limit price. So same as the limit order, essentially. It's basically the highest price you're willing to pay if you're buying, or the lowest price you're willing to sell if you're selling. So it's basically like an if-then statement. So if this happens, if the market hits your price, then this will happen. Then it will execute the limit order. So there are two types like the limit order. So you have your buy stop limit order for buying at specific levels at, for example, breakout or at support, and sell stop limit order for cutting your losses or taking profit. So in Dragonfly or in the web platform or in the mobile app, so you'll see the order type. And with the order type, you would have to click on it so you can see the drop down menu. And from limit order, you have to select stop limit. And from there, you'll be able to put a stop price and the limit price. So in this example, we're trying to sell we're trying to set a stop loss for A-REIT at 37, and you're willing to go as low as 36.95 pesos per share. So when A-REIT's price hits 37, your limit order of 36.95 will be sent to the market, and you will be filled immediately and be out of your position, further limiting any losses. Now, I should also let you guys know that there's a drawback to these types of conditional orders. For example, if the price rallies too fast or gaps up or plummets too fast and gaps down, then your stop limit order might not be triggered because it basically skips the price you set and it goes even lower, so your order will not be activated. So that's one of the things you just have to pay attention when you set this type of order. Can I see in the audience who here has used a stop limit order before? If you guys actually do use it a lot. It's really helpful when you want to automatically get out of your positions. Does anyone here use stop limit orders? I guess none yet. Oh, sometimes you did once. All right, yeah. So to refresh on the stop price and limit price. So stop price is basically the trigger. It's not the price you're getting out of. It's not the price you'll be selling at. The price you'll be selling at is the limit price. So stop price is the trigger for the trade to be activated, and the limit price is basically the lowest price you're willing to sell. That is the price you will most likely get out. All right, let's go on to the next. Let's go on to an example here. So this one is Ayala Land, similar example. So let's say if the market hits 30 and you want to buy at a breakout, since it's right now trading at resistance. So let's say you want to set a stop limit order, a buy stop limit order. So what your stop price would be 30, and your buy limit order would be 30.10. So for example, if it hits 30, then you're willing to pay higher by 10 cents, and you'll be filled immediately. So and then the next one is a sell stop limit order. So this one is basically for setting stop loss, setting stop loss, right? So if the market price hits the stop price, which is 117.5 pesos per share, your limit order will be below the market price, and you'll get filled immediately. it will immediately stop your losses, and you can reposition yourself with another stock. So this was URC back in early 2024. All right, let's go to another advanced order type. The next one is what we call a trailing stop limit. It's a modification of the typical stop order that can be set at a defined percentage or peso amount away from the stock's current market price. So this is good when you want to trail a stock that's trending higher, for example, Plus, right? Because as Plus rises, you don't want your cut loss to be all the way back down at 10 pesos, right? Because let's say it has a major correction, or if it has reached its peak, you don't want to get out at the very low, right? You want to set a stop loss at a specific level based on where it's trading at. So it allows you, a trailing stop limit allows you to set a limit on your downside without setting a limit on your upside. So a trailing there are two things you need to be aware of, right? So the stop price is what we call the trailing offset, and then the limit price is still the same, except that it depends on your trailing offset. So a sell trailing stop limit moves with the market price and continually recalculates the stop price or trigger price at a fixed amount below the market price based on the defined trailing amount. So let's say A-REIT's last price here was 39.60, and if you want to sell a trailing stop, if you want to set a trailing stop order, first you would have to change the order type from a limit order to trailing stop limit, right? And the next is you have to set the stop price. It's done by determining your trailing offset. So you can either use a percentage point or a fixed peso amount, right? So from 39.60, you can set it as a 6% decline from that price, or if it drops by 5 pesos, then that is your stop price. So for example, here I set it at 6%. So at 6%, if it drops by 6%, my trigger price or stop price is 36.94 pesos. That's 6% low. That's a 6% decline from 39.60. So with that, you would be able to set your limit price, which is basically the offset distance from that trigger price. So here in this example, in the example here, I put minus 0.5 cents. So basically, from 36.94, I will be taken out of my A-REIT position at 36.89, basically 5 cents lower than the limit price. So as A-REIT's price rises, your stop price and limit price will also rise. So it's based on the last trading price. So for example, at 39.60, if it peaks at 39.60, your trailing offset and limit price will not change. It will still remain at 36.94. But if it, for example, the next slide, you can see, if we go on to the next slide, if, for example, A-REIT's price reaches 42 pesos per share, your stop limit rises, your trigger price or your offset, trailing offset rises to 39.48, and then your limit price rises as well to 38.98. In this example, I think I changed it to 50 cents. So basically, as the price rises, your stop price, your trailing offset rises as well, and so does your offset distance or your limit price. So that is really helpful when you are trying to follow a trend on any stock. Let's go on to the next advanced order type. So the next one is what we call an order cancels other. It's a more advanced conditional order, but make no mistake, it's simply just using two separate orders of a stop limit order. So it only works when you have it works best when you have an open position and you use stop limit orders. But you can also use limit orders, since when you take profit, you don't necessarily have to use a stop limit order. But in this example, I'll use a stop limit. So let's say I have a position in A-REIT and I want to set a stop limit a stop loss and a take profit level at the same time. So what I would do is click on OCO on the web platform. So by saying that, the OCO order is only available on the web platform. It's not available on the mobile app. So on the web platform, when you click on OCO, this order form will come out. So you will see two different types of order you can set. So one is to take profit, one is to stop loss. So in this example, I have set my stop price for taking profit at 45. My limit price is 5 cents lower at 44.95. And then for my stop loss, I set it at 37, and my limit price at 36.95. So 5 cents lower. This way, I get out right away when my order is triggered. On the next one, we have a different version of this. It's what we call an order sends other, or exit signal, OSO, on the options when you click on the order entry form. So this is good when you want to set a stop loss or take profit level after your initial trade. So for example, you have a limit order to buy AREIT at 38.95. And at the same time, with this type of order, a conditional order, you can set a stop limit or a stop loss order for AREIT at 37 pesos per share. And then it's really good when you want to automatically cut your losses or take profit right after you send an order, because I'm sure not everyone can always monitor their trades actively. Now, what if you want to set an initial trade and then set a stop loss and a take profit all at the same time? Well, thankfully here at Dragonfly, we have that exact order, a conditional order type. It's what we call exit OCO, or exit order cancels other. Basically, it's the combination of an OCO and OSO order. It's the perfect conditional order for trade management. Why? Because you set all your orders at once. You set your entry price, you set your stop loss, and you set your take profit level all at the same time. So here's an example on the next slide. Let's say you want to buy SPNEC at support, right? So entry price would be, you would be able to set your entry price at 1.43 pesos per share, your stop loss at 1.36 pesos per share, your target price at 1.70 pesos per share, all in one trade. And you can set the duration to good till cancel, so you can simply move on to the next trade, right? So here, on a portfolio of 100,000, we are risking 1 peso or 1% of our entire portfolio, with a risk reward ratio of more than 1:2. So this is a good trade, and obviously in hindsight, right, you wouldn't have hit this, but while this was happening, it looked like an interesting sideways trade, because you would buy at support and sell at resistance, just following what SPNEC's chart is telling you, right? The next one is an example of buy on breakout. Same stock earlier, Ayala Land, back in 2023. So let's say you want to buy the breakout, buy the breakout, set your stop loss, and take your profit all in one trade. So again, click on exit OCO on the web platform, set your entry price, which can be a stop limit, or it can be a stop limit since we want to buy the breakout. So stop price at 30 and limit price at 30.10, so you would get filled immediately. Your stop loss at 29. And I think we had some technical difficulties. I apologize for that. I'll just go again. So let's say you want to buy Ayala Land at the breakout, right? So here you can simply click exit OCO on the web platform. And then since you're buying on breakout, you want to set your initial trade at a stop limit order. So change order type to stop limit. And then you set your stop price at 30, your limit price at 30.10. So that way you get filled immediately. And then you can set a stop loss using a stop limit order. And then your stop price is at 29.05 and your limit price at 29. So you get out if you're prevent further losses. And then for your take profit, you can simply use a limit order at 33 pesos, because it will not work anyway if the price does not reach 33 pesos per share. So with all that said, here are a few reminders. when it comes to your portfolio and trade management. So a rule of thumb, especially when you're starting out trading, is to only have a risk exposure of 3% max at any given time. So an example of this is you have 3 open trades. You have Spinec, you have Ali, and you have AREIT, right? And each of them are only risking 1% of your portfolio. So if they all lose, you're only down 3% of your portfolio. So that allows you to really manage risk properly. But as you gain experience and more knowledge about the market, you can increase your risk exposure by, let's say, another percent from 1 to 2 to 5% based on your own risk preference and your trading strategy, right? And then always make use of break-even stops. Once you have an open trade that has a decent gain already, don't allow it to turn into a loss. Move your stop loss to break even, which is usually 1.19% above your entry price because of the selling fees.
Yep. And you might be wondering why there's that picture. So why do we use break-even stops? Because we don't want na pera na naging bato pa.
Yes, that's right, Jared. Okay, on the next slide, we have an example of this. So here is Jollibee Foods Corporation back in early 2024. So let's say you wanted to buy the breakout, right? You entered at 261, but then it did a false breakout. It retested the resistance. Resistance turned to support, which became resistance again. So right now, it was up 5%, right? So since this is a breakout trade, you wanna when it does show you a good successful breakout like it did earlier, you wanna move your break even stop. You wanna move your stop loss, sorry, to your break even already, because if you did, you would have been taken out at break even, further preventing any actual losses. But when you do other types of trade, for example, buy a support or another breakout trade, you normally want a decent gain. So around 10 to 15% is okay. It's a decent enough gain for you to move your stop loss to break even. All right, so now with all that said, let's go on to an actual case study where me and Jared applied everything we discussed here. So we're gonna talk about Philex Mining or PX, one of the more recent trades we've done and the most profitable trade we've done so far this year. So this is something we actually sent out a trade alert, and I want to see in the audience in the Zoom or in Facebook if anyone actually followed us on PX.
Yeah. Kaway naman.
Yeah, if you guys followed us on PX.
PX-natics.
All right, nice. Yeah, I
Hey.
see some people who followed us. Yeah, congrats on that trade.
Congrats.
Yeah. We're gonna still hold this stock, by the way. Yeah.
Yeah.
All right. So here's our trade plan. So before we go to the chart, so the reason why we wanted to trade PX, because it aligned, all the stars aligned with PX. The fundamentals and technicals were all great. So fundamentals, we noticed that gold prices were an all-time high because of the current global macroeconomics. There's also the upcoming commercial operations of its Silangan mine by the first quarter of 2026, which is expected to contribute huge earnings and dividend growth in the next year. All right. Are we okay? Are we clear? Okay. Sorry again, we had an internet connection issue. So as I was saying, the reason why we hit PX is because the stars aligned. The fundamentals and the technicals were all great. So fundamentals, we saw that gold prices were at all-time high because of the current global macroeconomics at the time. And then there was the upcoming commercial operations of Silangan mine by the first quarter of 2026, which is expected to contribute huge earnings to the company and result in huge dividend growth as well. And then on the technicals, we saw our favorite pattern, the cup and handle pattern, which was it was also stuck in a large consolidation since mid-2022. So that was a huge sign that if this all panned out, PX was going to be a huge play. So on January 27, we issued a trade alert, right? And we actually made a OS on the next slide, please. So we bought the stock on January 27, 2025, right at the handle, the low of the breakout candle. So we made an exit OCO order for this, but obviously now we canceled our take profit level and moved our stop loss because of how the stock is performing. So basically, we had a limit order at 3.20, a stop loss at 2.99, and a target price of 4 pesos initially, because that was the next major resistance. But based on, when it broke out, this is one of the nuances you can actually take note of. Once you see a stock that has actualized the expectations, then you can actually move your target price a little higher. But if you are very disciplined, or if you have a plan of selling half and then holding on for the next run, then that's something you can do as well. So this trade was about 10% of our entire portfolio. And then current price as of yesterday, we're up about 61.25%, excluding the selling fees. So this is one of the trades we're very happy about. And it actually worked because we did apply everything we talked about here in this webinar. So with that, let's move on to some of the more common trading mistakes that traders such as me and Jared have made as we trade in the stock market here in the Philippines. So the first one is trading without a plan. So many traders always jump into the market without a clear strategy in mind. So that leads to impulsive trades based on emotions and market noise. So without a plan, you end up losing more than you should have. And you end up also over trading or failing to take profit at good levels and then letting your profit turn into losses, right? So that's one of the mistakes I have made in the past and something I would never forget anymore. So how do you avoid it easily? You just have to define your trading strategy and create a trading plan. It's simple as that, right? So what Jared said, based on fundamentals and technicals, set your entry price, your stop loss, and your take profit level, and stick to the plan. Don't really deviate unless there's a good reason for that. And that mostly applies to the take profit level, because you can keep moving it higher because of the potential to earn more. But always manage your downside very well. That's probably the hardest part to do, right? The next one is fear of missing out. Jared, have you ever experienced FOMO in your life?
Yes, definitely.
Yeah, I have experienced this quite
Yes.
a few times.
Yeah.
Ditto, for example, before when it rallied to like 18 pesos. That was my first FOMO trade. I'll never do that again.
Yeah.
So traders often get caught up in the excitement, especially when so many people are talking about this. So they fear they'll miss out on further gains, on big gains, and this leads them to chase the stock. So buying at these unsustainable levels will always lead you to getting trapped at these steep corrections. So how do you avoid it? You just have to be honest with yourself, recognize the emotional trading aspect of it. If you're buying because everyone's talking about it, then I think it's a good idea to stop and reevaluate why you're going to enter this trade. So always trust your process. Never just listen to everyone else, because not everyone is right. And the final one is no risk management. This ties back to trading without a plan. Many traders focus on the potential profit that they stand to gain, ignore the risk. So that's not the best thing to do, because trading without risk management will always lead to losses that could be avoided if you practice proper risk management. And if you never practice any risk management, you would eventually wipe out your account. So how do you stop this? Very simple. You set a stop loss, define the stop loss level, and stick to it. A good rule of thumb is to always risk 1 to 2% of your capital per trade. So always use the correct position size. Apply what Jared taught a while ago on how to determine your correct position size. And that is all for our presentation. We'll move on to the Q&A right now.
Yeah.
All right. So everyone, please drop your questions either on the Zoom chat or Facebook. We'll answer them to the best of our abilities. All right, let's start with the first question. Where to get the fair value of a stock? Is it available on Dragonfly? Yes, it is available on Dragonfly. You can get the fair value of a stock based on our research reports here in Dragonfly. You just have to go to the investing club and click on analysis and research. Currently, we have the fair value of the REITs and the bank stocks. We're working on the power sector right now.
Yep. You can also look at our weekly stock pulse report.
Yes,
So
yeah.
on Facebook, right? We post it we have the fair value prices of all the REITs.
The PSEI.
Yeah, PSEI. This is the Bloomberg consensus, okay?
Yeah.
So yeah.
Yeah, so basically that's just the consensus price of all the analysts that publish their reports on Bloomberg. All right, next question. What's the biggest mistake you did that taught you a lot? Jared, what was the biggest mistake you ever made in trading, not in life?
Biggest mistake, I guess all in. Yeah, that's.
Oh wow, what stock did you go all in? Do you remember?
Yes, but yeah, I don't want to share. It's
traumatizing,
yeah.
huh?
But yeah, I lost 20%.
Wow.
And I was all in, so just imagine. So
yeah, my biggest mistake was definitely emotional trading. When I got started, I would see so many people make these big profits, and I end up chasing certain stocks. So that mistake has taught me a lot of lessons, how to tune out the market noise, how to trust your own process. So yes, for Jared, it's going all in. For me, it's emotional trading. All right, thank you for that question. Let's go to the next. Where can you find the trading stop in the app? So currently in the mobile app, we don't have trading stop. It's only limit order or stop limit order. If you want to set a trading stop, you would have to use the web platform. Yeah. All right, next, how to compute the stop loss ratio.
Stop loss. Do you mean risk to reward ratio?
I mean, yeah, it has to be that, because that's how you get your stop loss.
Yeah, like what I said, right? You can use it in trading view. So that's one, using the position tool. But basically, right, you have your stop loss, right? I mean, you have your entry. Then your stop loss is a little bit below your entry price, right? So basically the distance, right? That distance, right? You compare it on relative to your target price. So if your target is here, tapos your entry and stop loss distance is here. So parang, when you stack it on top, is it more than one? Is it more than one? Is it more than 2, 3, 4? Right? So basically the rule of thumb is dapat the distance of your entry and your stop loss, it should be, when you stack it on top of your entry, dapat twice.
Yeah.
To your take profit, right? So that, example, you lose one, right? But your winning trades, you win two, right? So over time, right, the more you trade high quality trades, right, the more likely na you'll end up earning money, right? So there.
Yeah. All right. Thanks for that explanation, Jared. Let's go on to the next. So next question is, in determining a trade setup, do you usually rely on price action or indicators?
For us, it's really price action first.
Yeah, indicators always come second.
Yeah, indicators, parang they just help you. But
yeah,
even without indicators, parang if you just focus on the price action, parang you already know na there's a trade. Then if you want the gravy, right, then you look
it's best to
indicators.
Master price action before indicators.
Yeah, that's
why.
Yeah, if you notice in our webinar series, part 1 and part 2, we're not looking at indicators, though. We're just looking at support, resistance, breakout, buy and support. Dun muna, because that's the foundation. Then once you master that, then you can delve into the indicators for like added entry signals and all that.
Right? So there are different chart patterns, and there are also different candlestick patterns that we did not discuss, but you can easily Google online, like the doji candle, the hammer. So those all help you when you want to create a trade setup. And then you can use indicators to build conviction and determine the trend.
Yep. Yeah. So foundations first.
Yeah. So price action is always a first.
Yep.
All right. Let's go to the next question. All of these topics, is it applicable when you're going for the long-term investing?
Yes.
Yeah. Yes.
Definitely. Like,
go, Jared.
Example, like you want to buy a stock as cheap as possible, right? You're gonna look for the major support levels, diba? So once it's example, you like this stock a lot talaga, and you want to buy the dips, you have to look for the next support levels. Then once price hits that level, di ba? Saluhin mo, di ba? That's
Yeah.
your buy and support.
Yeah, so when we determine a company we want to invest in for the long term, for example, especially with the dividend harvest portfolio, we always use technical analysis to determine our entry price and whether or not it is a good time to actually enter. Because, in this Philippine market, the price is never really going to run away from you. There will always be a retest eventually. Yeah. Let's go on to the next question. What's a good success rate or win rate? Well, honestly, for me, it doesn't matter if you're winning, if the win to loss ratio is more on the win or loss side, because if you have a good risk reward ratio per trade, even if you have, for example, 60% loss, you should still come out above or come out with a profit, because your losses will always be smaller compared to your potential to all your profits.
Yep. I guess shout out first to the one who asked this question. So it's actually Tita Glo. Hi.
Oh, hi,
Yeah.
Tita Glot. She's the investor behind the Money Wise engineer.
For me, just to add to this question, so for me, the formula talaga, if you wanna, my simple formula is your risk to reward ratio at least 1, tapos your win rate dapat 50%. Like if you have at least that, then you still have a chance of making money, right?
Yeah.
So for me, my win rate, I aim to make it more than 50%. Then of course my risk to reward at least 2. So I think once you have that risk to reward of at least more than 1, tapos win rate at more than 50%, I think over time you're gonna be a profitable trader.
Yeah.
So for me, that's my goal.
I want to add also, it's okay that if your win rate is 40% and your loss rate is 60%, because of the risk reward ratio, you would still come out on top. But make sure it doesn't become like 30 or a 20% for a 20 or 30% win rate, because that's when you're depending on your risk to reward ratio, you might not actually come out on top, especially if you stick to 1:2 all the time. Yeah. All right, let's go on to the next question. What's more effective, diversifying portfolio or focusing on trends or giant companies?
Focusing, do you mean like
I think this is more like concentration.
Concentrated portfolio? So that's funny because in the strategic growth portfolio earlier we were pretty concentrated, right, when you started out. But of course, once the market started turning downward, diba? Parang that's where we got hit kasi we were still relatively concentrated. So kaya when the market went down, we were more diversified, right? Now we're looking at mga 9 to 12% position size per company na, diba? So for me, it really depends. Like if the market's really in a bull market, of course it will pay you more if you're concentrated. But if you're in a medyo alanganin na market or choppy, or like right now, it's downtrend na di mo alam if this is the end of the downtrend, right? Or if it's reversing, then it's safer to be diversified.
Yeah.
Yep.
I agree with Jared. Also, if you're actually, like, for example, trying to build your portfolio right now, you'll notice if you're highly selective and you pick stocks with momentum, you'll come out a bit diversified because you have, for example, Plus, you have PX, you have JFC that recently broke out. So PNB, China Bank. So if you, like, for example, buy all these stocks, you would end up diversified, right? So it depends on the market conditions, because right now it's a stock picker's market and it's hard to be concentrated right now unless you're all in on Plus or all in on PX, for example.
Which we don't recommend. It's riskier.
It's riskier that way. But yeah, that's a good question. All right, let's go to the next. How do you know when to sell, especially if the market is bullish?
So sell, it really depends on your objective. So if you're a trader talaga, once it hits your target hits next resistance, and ibenta mo na. Then
Yeah, stick to the plan.
wait for another setup if you want. But there are traders na talaga, they wanna hold it till the trend bends eh. So use a trading stop like what Franco said, maybe 6%, diba? Or use a moving average, diba? Once it goes below the 50-day moving average, edi sell mo na lahat.
Yeah, that's a good indicator to use for taking profit when you know it's time to take profit.
Yeah, or sometimes other people do like if there's the first lower high, then you sell. Or if you see a head and shoulders pattern, then double top, your reversal patterns, then you sell.
Yeah.
So there.
Because the bull market will never last. And usually there are signs.
Yeah.
Like the head and shoulders double top or a breakdown of the 100-day or 200-day moving average.
Yeah.
Yeah.
Or if you're a pure fundamentalist, once it hits your target price, benta mo na.
Your fair value. Or if you see slower growth, then you can also consider selling your position when the market is bullish overall.
Another fundamental is if the dividends they declare is cut, diba?
Yeah, that's time to get out.
Fundamental reason na yan, not based on technicals.
Yeah.
So there.
All right, next question. What key indicators do you use? Actually, Jared and I use pretty much the same indicators.
Bollinger Bands,
moving averages, RSI, sometimes stochastics,
MACD. I don't use it that much anymore.
Yeah. So we always use moving averages and the Bollinger Bands.
Yeah.
The 20-day, 50-day, 100-day, and the 200-day moving averages.
You can also maybe use the Fibonacci, right? Sometimes it's useful. Like PX the other day, it bounced off the 0.236 Fibonacci, right? So, but for me,
that's more of a tool than an indicator.
Yeah, I don't really use that much indicators, to be honest.
Yeah.
So there.
All right. Next is, aside from common price patterns that you showed in part 1, can you recommend other price patterns that new investors should research and learn? The pennant, the flag. The pennant is basically a symmetrical triangle.
Continuation pattern.
Yeah. A flag pattern. What else is there?
The saucer.
The saucer is basically a cup and handle without the handle.
Yeah, I guess you can also look at candlestick pattern.
Yeah, candlestick pattern. So the hammer, the falling star, the shooting star, the doji candle,
the
engulfing. Yeah. So those are something everyone should be familiar with, but you don't have to memorize the name. You just have to remember what the pattern looks like.
Yep.
Yeah. All right. Next question. How do you study a particular stock as a beginner? Example, A-REIT. All right, Jared, REITs.
Read our research reports, right? So we have a stock coverage on A-REIT naman. So yeah, go to Investing Club, then read our reports.
Yeah, as a beginner, it's best to always rely on your broker's research reports because they give you all the information you need to know about a certain stock.
Yeah.
You can also look at their company website, their corporate financials, because it gives you a pretty much good idea on their business model and what developments are in progress.
Yeah, and look at the news or PSE Edge for their
PSE Edge is always the best place to start when you want to be updated with all the latest stock news.
Yeah, like today, if you were updated with the news, A-REIT actually approved their property for share swap, and they already gave out the details like the valuation of the properties, what's their rental and all that. So yeah, read the news. I think that's the easiest way to start as a beginner because I always say this, there's may pera sa balita, really. So it pays to know more about the company.
Yeah. All right. The next question is there a possibility that Dragonfly may be available for US stocks in the future? Next slide. So the question is about US stocks being available in Dragonfly.
We'll just say yes.
That's all we can say.
Yes.
All right, next question. When will you launch Pera? We'll be launching Pera sometime middle of the year.
Yeah.
Yeah, so stay tuned for that.
Yep.
Okay, next question. As shown in the previous slides in MWC Manila Water, the existing trend is a downtrend. I'm just wondering how you came up with the trading setup that predicts it will reverse and hit the TP price. I usually lose my trades in those kinds of setups.
it's more of a parang how I see it is more of a range. Parang yeah. For me, it's more of a range because and also it came from a impulsive na uptrend up move tapos parang channel down na sideways. So for me, that's still an uptrend.
Yeah.
Depends
Well,
how you see it.
when we executed this trade, what the trading plan here was, well, one, we actually waited until it created a pattern for us to, because we didn't really want to buy it
Established
at
support
support,
level.
right? We wanted it to establish support, and then it formed a cup and handle, and then that's when we knew that it was time that we could execute the trade. But fundamentally, we forecasted a dividend of 1.13 or 1.15 at the time, banking on the tariff adjustments that was approved by the government. So that was obviously going to boost earnings and the dividend growth. So that was a fundamental driver. All we needed was the technical setup. Now, it was okay to buy the support, but in order for us to, to build the conviction and that, a higher rate of success, we waited for a better technical pattern to show. So when that cup and handle showed, we knew we could already execute the trade.
Yeah.
Yeah. Next slide. Jared, this is the last question.
Paano niyo po nagagawa na i-control ang inyong emosyon kapag pababa ang merkado? So, parang sanay na kami. Like, when the market goes down, parang... Kasi for me, like, I started trading 2019. That's like near the peak of the market na eh. Like, pababa na yung market, right? So, I guess I'm a bear market baby na. But how do you control it? I guess if you have to cut your losses na. Then don't be in a rush to get back because you know na the market's down eh. So you take all the time you need. Tapos read up because even though the market's bad, you'll find mga hidden gems like plus PX na even though the market sucks, di ba? Tumataas pa rin sila, right? So, take that time to reflect and parang fine-tune your stock picking process and try to pick out the outliers. Pero how you control it is, I guess...
Through experience, actually.
Experience, yeah. It's a personal journey.
Yeah. All right. Actually, that was not the last question. This is the last question. Can you read the last question, Jared?
Can you repeat the MACUs? 20, 50, 100, 200.
Yes, those are the M's.
Yes.
And that wraps up our Q&A segment. So on the next slide, please, we'd love to hear your feedback. We'll give you a few moments to fill this out. And based on the feedback also, if you do fill it up, you have a chance of winning our exclusive tote bag and cap.
Yep.
Yeah.
So yeah, type in your feedback or maybe you have some request on future webinars, right?
I guess I also want to announce that the next part or the next series in technical analysis will be the advanced one, where we will talk more about the different indicators and tools that you can use when you want to create a trade setup.
Yep. So if you have something in mind that you want us to discuss,
Yeah,
you can type it in the feedback form, right? Para we can include it in the next series, diba?
Yeah, and in case you missed part 1, you can simply go to our Facebook page and watch the replay there. We'll let you guys know when it's up on YouTube.
Yep, but it's on FB Live. Right?
Yeah.
You can check it there. So yeah, go guys. Type in your comments. I mean your feedback. Let's read the comments. Wow. Thank you, Aubrey. Yeah. I appreciate the insights. Thank you so much.
All right, I think now we can announce.
You have a winner?
Oh, we don't have a winner yet.
Wala.
Okay, so if you want to learn more, please follow us on TikTok at Dragonfly HQ, where we I think you click on the next slide again. So yeah, we have the stock research, market news, and education.
Yes, and we're also live every Monday in
For Market Mornings. Yeah, In case you want to watch us
Chart.
live the market, trade the market live or analyze the market live, then check us out on TikTok every Monday at 9 a.m.
Yep. Where we also do technical analysis on the spot.
Yeah. Yeah, and also we want to promote our next webinar. It's with the great Kuya John Investing. So
Hey, I
Kuya
know
John will be joining us for a webinar, and we will be discussing, well, his trading strategy, his insights, his signature portfolio as well, in case you copy him on the signature portfolios in the mobile app. Yeah, this is basically part 2 of what we did with Tita Glo of the MoneyWise Engineer. In case you missed that webinar, which was super insightful and really great, you can simply go to our Facebook page again, watch the replay, or wait for the YouTube upload coming soon.
Yes. Mhm.
Can we announce the winners?
We have one na?
All right, so
Yes,
we will
meron
announce
na.
the winners. Jared, who are our winners?
Dun, 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 dun. Let's see.
Oh, this is a very nice name.
Was it?
Can we
Reveal.
show the winners?
Reveal.
There you go.
Fran Zoe Geraldine M. Corrales Deng. Wow, haba ng pangalan.
And Deng. The Deng is the other winner.
It's not one. Okay.
Yeah, Deng is the second winner.
Deng, okay.
Congratulations,
Okay.
you guys. We will please message our Facebook page to claim your prize.
Congrats.
Facebook.com/dragonfly/dragonflyhq.
Yes.
And don't forget to follow us on Facebook, Instagram, Twitter, and YouTube. Thank you
Yes.
everyone for joining us. We'll see you on the Advanced Technical Analysis webinar coming soon.
Yes. Thanks, guys.